Hi, Victoria here from HBA Encompass, the Bookkeeper Hub, and of course the author of Zest for Success. Back in my car studio. Yesterday we were talking about income tax. Today I want to talk to you about GST. So GST is goods and services tax, which in the end logic is a tax on the end consumer. So us as individuals, when we spend for our home spending, we pay a tax on products and we don't get to claim that back, so we are the ones being taxed. The logic being, the more you earn, the more you spend, the more tax that you pay. Unfortunately, in the meantime, goods and services tax is levied on businesses. So for all intents and purposes, businesses, if you're registered for GST, are unpaid, unsuperannuated tax collectors. I know, sounds really harsh, but that's the reality of it is. If your turnover is over $75,000 in a year, you need to register for GST. If it's under that, you have the choice to register or not to register. If you don't register, it means you don't have to charge GST on your sales, which may make you more competitive than the next person. But on the flip side, you don't get to claim the tax back that you've claimed on your purchases, which means that the cost of your goods increases as well. So you need to have a think about that and look into the maths as to whether you should register or not. Now, GST generally is reported on a business activity statement. For most people, they are quarterly statements that are required to be returned. If your turnover is over more than 2 million, it needs to be done monthly. You don't have a choice in it. And in some instances for small businesses, you can report annually. Now, as my experience as an accountant here, if you can make it monthly, it's much better for your cash flow because you're only paying out small amounts each month and hopefully you've got the money in. But if you're a business, it's a small business that doesn't charge GST, then perhaps the annual business activity statement might be better for you. So to put that into context, I have a client who has telecommunications business. He's on monthly basis, so the amount that he has to pay to the tax office is small, makes it easy for him to manage his cash flow. I have another lady who's in family daycare. Now, because education is GST free, and there are some anomalies there with GST, and I'm not going to get into all of them today because it's a whole book of an act in itself. I'm not going to go through everything. But because education is free, it means she doesn't charge, and childcare is free, because she doesn't charge GST on her sales, it means all the expenses that she has for running her business, she gets a GST credit on, which she gets back in cash. So she does an annual GST return when we do a tax return, and she gets a nice little hit of cash back in her pocket at the end of the year. So it's important to have a think about the best way to do it for you and your type of business. And the other type of GST registration you need to have a think about is whether you register on a cash or an accruals basis. So what that means in English is if you register on a cash basis, you only pay to the tax office the GST on the sales that you actually collect in your hand or your bank account, and you only collect a GST credit or get a refund from the tax office on the amounts you have physically paid out of your bank account, which as you're a small business is a good way to grow and make sure that you're keeping it in line with what the cash is going in and out of your business. Once you hit that 2 million mark, then you automatically have to register on an accruals basis. And accruals means that anything that you have invoiced, whether you have received it or not, is included in your BAS statement. But on the flip side, anything that you have purchased, whether you have paid for or not, goes into your bank statement. Or your BAS statement, sorry. And it can be beneficial, depending on the type of business you're in, to actually register on an accruals basis, even if you're not in that 2 million turnover. So for instance, if you have a retail shop where you're not selling anything on credit, people come in and they pay cash for every good that you sell, but you are able to pay your suppliers off, what it means is that you can claim that GST back as soon as they invoice you, not necessarily when you pay it from. So it's a bit of a timing difference, but something to have a think about. So that's a GST overview 101. The only suggestion I have for you is if you are registered for GST, please use some kind of accounting package to keep track of your money in, your GST in, money out, GST out. As you know, Xero is my product of choice, and even if you are a cash-based business, there are, or small businesses that are only working on a cash basis, there is a thing called a GST cash book, which is only $20 a month. So options are there, but you need to speak to an accountant or a tax agent or a BAS agent, a bookkeeper, to be able to get those specials from Xero. You can't just buy them off the shelf. So that's GST in a nutshell. My task for you today is to have a think about, for your business, the cycle of your registration, monthly, quarterly or annually, and then whether you want cash or accruals and what's going to be the best outcome for you. If you need some help, talk to your accountant or your bookkeeper. And I'll see you on the other side.